Thank you.
The gentleman from Missouri,
back.
Mr. Luetkemeyer, is now recognized.
Thank you, Mr. Chairman. Over the last few years, I worked on a beneficial ownership bill in the 116th Congress alongside Chairwoman Maloney. The goal of that legislation was to stop law enforcement from deputizing financial institutions to collect personal data from consumers. To do this, small businesses would submit simple, straightforward information to FinCEN's database regarding who the owner is of a particular business. This information would help law enforcement crack down on shell corporations participating in illicit finance. However, I'm concerned that FinCEN is not appropriately implementing this legislation into law. Mr. Reuter, your testimony discusses the beneficial ownership rule currently being promulgated by FinCEN, which would result in banks being unable to use FinCEN database to fulfill their customer due diligence requirements. Would you like to elaborate just a little bit on the aspects of that rule that are particularly troubling to you?
Yes, I would. Thank you, Congressman. The original intent to have a database that not only FinCEN could use, but the banking industry used to identify customers and beneficial owners was a great idea. Unfortunately, it looks like the revised versions and many of the current discussions show that they're going to limit access to that or make it very difficult. And in addition, they want us to still collect all that information, so a complete duplicative process. And then there's some concerns that reconciliation of the two will create additional compliance burdens. So we have 30 people in our AML BSA operation as a bank right now, and I think the spirit
makes you a lot of money,
BSA is,
people
yes.
Shuffle papers around, it makes you lots of money, doesn't it?
And BSA is super important to catch illicit activities and anti-money laundering, but we need to do it in the most efficient way.
That's not the way that this system was envisioned, though, was it? You were supposed to, when they promulgated this rule initially, you were going to be able, the banks were going to be able to access this so they could complete their forms, so they could complete the information they need to send in. Is that not correct?
That is correct.
So this is a complete reversal of what the intent originally of that bill was. Thank you. Also, Mr. Reuter, I noticed your testimony mentions my legislation, the Customer Information Notification Requirement Act. Thank you for that, which would update GLBA to provide one robust national data security and breach notification standard. I'd like to thank you for your support of legislation. Would you like to elaborate on the problem that it solves with regards to this patchwork of state laws that you have to comply with?
Yeah, so I mentioned earlier, we're in the business of trust, and we've been trusted with information for many years. GLBA has been around for 20 years, and I think it's been a great model for the banking industry. I would really strongly encourage that the prudential regulators be the ones that continue to oversee compliance, but trying to comply with 50 different state laws would be cost prohibitive and extremely challenging. Even though I said we're headquartered in Colorado, we have customers in all 50 states. So when I think about the prospects of 50 different state laws, if we had an unfortunate data breach incident, that would be almost impossible to administer. Right now, the 5 states that have passed state-level laws, only California is the one that is not giving preemption for GLBA. And so I think it's really important as we operate. Our customers move. The great thing about technology, as Penny said earlier, people can bank anywhere, and they do that. And we've done a great job as a bank, so they stay with us even when they're in another state.
A really simple fix to what could be a really major headache for you, is it not?
Correct.
Thank you. One key aspect of this hearing is the role of technology in providing access to credit for unbanked and underbanked individuals, an issue that receives bipartisan support here in Congress. However, the actions by this administration and the Federal Reserve seem to directly contradict this idea of increasing access to low and moderate income consumers. Currently, the Federal Reserve Vice Chairman Barr is re-examining the U.S. capital regime and is looking to significantly increase bank capital in the United States. Mr. Reuter, how would the ability of your bank be able to provide credit to low-income consumers be impacted by your capital requirements if they were significantly increased?
You know, I think the proposal makes a lot of sense, because to start with enough capital for the growth you'll see 3 to 4 years down the road, that's a big check to ask the original investors to write. And it was mentioned earlier, makes it almost impossible to start a new bank. So a phased-in capital approach is very logical. And I think it's also prudent from a risk standpoint as the bank grows.
Okay, but the question is basically you're increasing your capital to be able to address low and moderate income folks. Is that a necessary situation for you to address low and moderate income folks?
Absolutely. It is important we bank the entire community. So new banks help in that endeavor. And as I said earlier, our 300 officers on the ground make a big difference.
I yield back.
Thank you.